This video chart presentation at International Stem Cell Corp. It's an OTC QB listed company, meaning that it's fully reporting with the SEC, and it trades under ticker ISCO. This is a look at a weekly chart, and I scaled it back to a 5-year period to show a strong support level down here around 14 cents. When it hit that area in late 2008, stock followed that with a strong climb over the next year and a half, all the way up to peaks at 279. Retraced once, really fought with some top-end resistance up there around $2.40. But then it began a multi-year slide from those highs all the way back down to right near that support level. So as a pure candle play and what could be a huge double bottom pattern, this chart's hitting the radar to hold these support levels. And I can see that the MACD basically flatlined right through there and then began an upward trend in 2012. That's a positive divergence. The price per share is trending down. The MACD, which is a gauge of trend, is rising back towards zero. Now, a key point for technical traders is the MACD breaking through zero. That's why it's referenced as breaking the money line, because it's a bullish indication of trend if that happens. PPO also flatlined basically in 2012. ADX is down very low. That just tells me that there's not a lot of strength of the direction. As far as some volume-based indicators, we reference this in a lot of videos. Trending on the lower half of the indicator is a bearish position. It says people are paying lower prices for the stock. What I look for is break back through 50. And basically a flip-flop of this. I want to see the indicator trending on top of 50, shows people are paying higher prices for the stock. It's a much more bullish position. Accumulation distribution, sliding down. Of course, that should be expected. The price per share has been moving that way. Shaking money flow, it's based on the accumulation distribution. Holding in the red, says that sells have been outweighing buys. But over the last couple months, it is starting to make a little bit of a rise back towards zero. Again, the key point to bullishness is a break back through 50 to show that buys are outweighing sells. CCI, basically what the CCI is a tell of today's trading price compared to the mean of the last 20 periods. The official buy signal comes in on the break of 100, and because it's riding down low, all I look for again is early signs of bullishness, and that'll be making a higher low, holding above negative 100, and of course ideally making a break through zero and up towards the 100 point to show it's trading well above its 20-day mean. Full stow, gauge of momentum, down relatively low. Obviously there's not a lot of bullish momentum in the play. And the tricks, basically in 2012, also flatlined. The tricks combined with the MACD usually give a pretty good reading on the overall trend of a stock. And because they're flatlined and the MACD is trending back towards zero, it's just early on hints to look for a reversal in the play, which of course ties in with holding that support level. Relative strength index, it's a gauge of momentum. Want to see it back above 50, because as I point out a lot of times, you can see the bullishness that follows when the momentum kicks it in gear and that RSI starts trending above 50. Now, of course, we just use those indicators as some supplemental knowledge looking for hints of a potential move. It always comes down to the candles. And in the case of ISCO, certainly put a very bottom support there at 14 cents. I'd say it's going to start to pick up around 15 cents. Because I scaled it out, it's a little bit more difficult to see. But this 2-day pattern from last Friday and then again on Monday is called a meeting line pattern. Stock gap down on Monday, some buying pressure came in, pulled back up to meet the previous close. It's a moderate or reliable 2-day candle pattern, but it needs confirmation, which means something along those lines. It needs to have another up day, the more volume the better to confirm the pattern. And what that does is increase the odds that this chart's going to try and maintain some upward pressure and make a move off this bottom. See that purple line, it's 20-day moving average. Stock's had a difficult time closing above that. That would be the first little breaking point I'd be looking for. And I think it's going to meet a little bit of resistance on the nickels. Meaning that I think there's going to be some right there around 25 cents. A little bit more certainly at 30. And I'd expect it to really start to pick up around 40 cents. Now it's a clean double from where it is. And while that type of thing is great, really what I'm looking for is just the idea of a reversal in the chart. A large double bottom pattern to be made. And for a new uptrend to begin. And I think that the overall combination of long-term indications of trend, the support level, and this little meeting line pattern makes this chart worthwhile to keep on radar to kick off 2013 and see how it performs. Those are the type of things that I'd be looking for in the ISCO chart, but as always, merely my interpretation. Thank you for watching and trade smart.